Hi everyone, thanks so much for joining us for this interview panel. So I'm Joseph, I head business development at OpenNodes and very happy to be your host for today. So OpenNodes is a frontier technology think tank and we advocate for technologies such as blockchain, and we are very proudly supported by an ecosystem of partners who collectively look to drive stronger collaboration and education within the blockchain ecosystem and beyond. So through this panel interview, we hope to shed some light into the current blockchain landscape and how some startups in Singapore are approaching this space. So for those familiar with the space, you would know that there's a camp of blockchain startups which focus on disintermediating existing FIs like banks, central banks, and then there's the other camp who are startups looking to in fact collaborate with these traditional players rather than disintermediate them. So today I'm very glad to be joined by three founders of blockchain startups who have made significant progress in the financial services sector. So let's start by first getting a 1-minute introduction of each of our panelists and a bit more about their companies. So let's start with Jay, Mriganka, and lastly, Tianwei. Please go ahead.
Yes, thank you, Joseph. Very happy to be here. Have been doing quite a few online panels, and I think really that is how the new normal is going to be, where digital is going to be really more at the forefront. And of course, hopefully, with that, we are able to bring out more benefits. So I'm Jay, I'm managing director, and I run STACS. STACS is a fintech that is focused on blockchain for finance. So, I like to always give a quick explanation of STACS on its own. It's actually securities trading, asset clearing, and settlement. So as the name suggests, it is a blockchain that we have built for finance. And I think over the last 1.5 years, talking to over 200 institutions around the world and strategically focusing on ASEAN now. Joseph, you're right. I think there's two camps. That one, I would say, is looking to disrupt. You are exactly right to say that we, on the other hand, we are not looking to disrupt, but really to empower. And I would say even to the extent of helping institutions to enjoy benefits of blockchain within days. Yeah, this is something that we call the satellite infrastructure that we are launching in response to demand from the industry. So that is something that we are very excited, and hopefully we can share a little bit more over the next 30 minutes or so. Thank you.
Hi everyone, quite excited to be here. I'm Mriganka, one of the co-founders and CEO of Merkle Science. So we provide a blockchain monitoring solution to detect illegal use of cryptocurrencies. So essentially it's a cryptocurrency AML solution, like a B2B solution for cryptocurrency exchanges, financial institutions, and payment providers to detect whether the Bitcoin that they're directly or indirectly dealing with is involved with like illegal activities such as ransomware, darknets, or a hacked wallet as such. And the same platform or the same technology is used on another platform by law enforcement agencies as a forensics tool, where they use this to track any illegal activity that they're investigating using cryptocurrencies. So any stolen cryptocurrencies, that's what law enforcement or government agencies typically tend to investigate using our platform. And yeah, I think it's I guess a lot of the panel will focus on FIs and regulations. As we're a reg tech company, I'm happy to add in our views here as well.
Hi everyone, I'm Tianwei. I'm one of the co-founder and CEO of Xfers. So I don't think Xfers is a blockchain company. Xfers is a fintech platform that help digital businesses in Singapore and Indonesia with a wide range of financial services, such as payments, fund transfer, e-money, e-wallet services, and card issuing. I think we have been in business for about 4 years now, and our most recent endeavor is going to a launch of our stablecoin initiative called Project StraightX. And I think that was basically some of our background in the blockchain space. But as a payments fintech platform, our focus have always been about enabling our businesses for going online, going digital, and providing better financial services to their client at a faster rate, at an easier rate, right? And a lot of the work that we do actually here is actually helping to speed up the process that these startups or these companies spends working with the banking partner or actually securing licenses. So here at Xfers, we don't really see ourselves as a disruptor. In a lot of ways, we see ourselves as a key partners of our banking partners to help them get into the market faster, because we do have some advantages of being more nimble and more tech friendly, given that our outfit is a bit different from the digital banking side, that enable, I think, both parties to benefit quite a bit, because our costs for development and securing stuff is a lot lower. So in that sense, we help our banking partners, help other companies access their facility at a much faster pace.
Awesome. Thanks so much, everyone, for sharing. So I think going back to the topic on why you see the need to collaborate with traditional financial institutions, I'd love to hear from the panel how are some examples you've done so. Anyone can go for it. Maybe Jay can start, right?
Yeah, I think that really is the core of our business. So, if I think back about why we started in the first place, I think really is the pain point that, financial institutions have really grown quite complex. But at the same time, I don't think it is about disrupting finance or disrupting financial institutions per se, because I think there is a reason why things evolve. There is a reason why financial institutions were invented or how they came about in the first place. And then zoom into perhaps the post-trade space where we are very active in. That has really gotten very complex in a sense that today, somebody who is trying to buy a security, for example, versus somebody who is trying to sell, there's so many different entities and so many different processes that are linear and sequential. And I think that is really the main pain point that we think technology can help to solve. I think a very common example that's been used is that trade can be done in milliseconds or maybe even faster. But the process to actually confirm and to settle that trade is still rather inefficient. And of course, it can be taking days, So I think that is really one pain point that is worth solving. And that is one way that we are trying to empower the institutions, because we do not think that, the entire financial institutions, post-trade, or maybe even some of the parts they are before, talking about issuance of securities, we don't think the financial institutions will be replaced. So from day one, we have been about providing technology, perhaps sometimes even co-developing solutions with them. Yeah, so that is the core of the business, as I stated at the very beginning. And I think that's important because technology is there. I think in my space, for example, in blockchain, enterprise blockchain finance, I think for the last 1.5 years, there's no more question about can the technology work. The phase of technology POC is over. It is more about how do we then use the technology to come up with a commercial use case that two things. Number one, before COVID-19, I think it's about revenue, where bankers are concerned about, can I have new business? And at the same time, am I able to cut costs? I think after the COVID-19, the new normal will be perhaps cost cutting is going to be very important. I think that is very apparent in the kind of benefit that our solution is showing. I'll go into some of the use cases maybe later if there's time. But I think across many of the use cases, be it bond structured product, asset management, we have seen and we have quantified cost saving to be above 50%. In some scenarios, I think 80 to 90%. So I think those are the benefits that we are bringing forefront to the institutions, and then hopefully that can be scaled out to the industry as a whole.
Tianwei or Mriganka, anything to add?
Sure. So I think, our approach, of course, is a little different. We're a reg tech company, so the very premise of our company is actually being the intermediary between banks, regulators, and crypto asset businesses. So we don't have a choice but to have like a strong relationship with banks. That's the whole premise of the business. But in terms of my background, I worked in finance, but I've also worked for a cryptocurrency exchange before. So more from crypto asset businesses and why they need to have a good relationship with banks. I think it's inevitable as they grow larger that they need to work in collaboration with these entities, because they need to have partnerships where they can process some of the fiat money rather than trying to completely disrupt them altogether. They need strong banking relationships, and that is core to even crypto asset businesses. So, like, at least for now, having very strong banking relationships is inevitable if you want to start a big company, because of the way regulations are in different geographies as such. Maybe in the future, I mean, it depends, or it's still to see, but maybe in the future, there could just be a cryptocurrency layer and a lot of companies could operate without banks. But at least for the next 5 to 10 years, I don't see that happening anyhow. Like, there would be regulations, and you would need at some point to take your money out or have like some sort of intermediary which connects like fiat currency to the cryptocurrency, which is why you need to have a very strong relationship with banks. So it's more like a lack of options rather than anything else, and that's why it's very important currently.
Yeah. Okay. Maybe it's my so I think both of you brought up a very good point, right? Like, mentioned about regulation and banking. As I mentioned earlier on, I Xfers ourselves from the very beginning don't see ourselves as disruptor. And I think I learned, I don't have a background in finance. I'm an engineer. I've been working just happened to be in the payment space for the last 4 years. And over the 4 years, I think I learned quite a bit about the space. And one of the things I have a takeaway was, number one, I used to talk about, the central banks and regulators as, promoters of trying to innovate financial stuff. And I think MAS is doing a good job on that, right? They've always been talking about providing innovation, allowing startups to disrupt. But I think the word disrupt has been probably a negative connotation, and over time probably misused. Because I think the philosophy that I come up with at the end of it is that, end of the day, I do not think that it is the regulator's job to innovate. The job is, however, I think the most important job of a central bank or a regulator is actually to protect the consumer. And if you understand that is their fundamental core job, you will understand that a lot of things are being done in that way, right? And I think over the years, I also talked with a lot with MES to open dialogue, which they're really open to, and also some of the closed door session. I think you can probably hear that MES will probably bring this out a lot of time. They will constantly mention to you that the banks plays a very important, or should I say crucial role in the financial stability of the economy, right? That we can always say that the banks are slow, they have dinosaurs and a lot of different things. But the fact is a lot of the things that they do are for public good. And whenever there's a crisis like the COVID right now, you're seeing that the MES will be pressuring the bank to do more for the whole economy, like giving out loans, trying to impose lower interest rate. And a lot of the costs comes from their cost center, right? So you can see here that they are actually a very crucial partner of the regulator to ensure stability and also well-being of the whole economy. So I don't really think that in that case, that a lot of the approach that, at least not for us, is disruption is actually a good thing. In this sense, we're trying to complement our banking partners here to do more. And actually, that's a big part of what Xfers is about, right? We have been working with our banking partners over the 4 years. And just last year, we obtained a widely accepted stock value facility status holder in MAS. And that took us, I think, a 2 years process. If there's one thing that I do also learn from this whole process is financial services are one of the most regulated space in the world. It will be. When we jump in, when I did FinTech, I think people don't really understand that when they say FinTech, it's probably more fin than tech, because my background is engineering. So you spend a lot of time on compliance and regulation because this is a very crucial, important factor of the whole economy, right? So one thing that you probably need to have is patience, right? You need to do things the right way. It's going to be very difficult to come in and just say, I want to do this overnight. I'm going to go a bit cowboy. I'm going to skip some regulation stuff. And this probably works for some people, but that's not the approach that we have taken, right? I think especially in Singapore, it's a lot more important that you figure out how to establish yourself, work with your partners, and show credibility over a long period of time. And that's been something that Xfers has always been focusing on, right? And it's part of the reason why we managed to secure the licenses last year, which is one of the major milestones there for the company itself. And it couldn't have been done without all the support from all our banking partners, because one of the hard requirements for that status require a bank to fully underwrite every dollar that we held on behalf of our client, because we become a pretty big e-money holder. And you can imagine that level of collaboration needed with our banking partner, that they are willing to underwrite every dollar on our system. And that's something that I don't think can be achieved in a very short period of time, and without the trust that you have built with them. Yeah.
So Tianwei, if we were to go dig a bit deeper, right? Can you share specific examples? Because I know that you guys on this side, even on Indonesia side, you have been working with banks, with the central bank. Can you share specific examples how you played side by side with them?
Sure. I think it's a bit different story across Singapore and Indonesia because there are different stages of development. So the strategy you have to use is a bit different. Singapore, I think, is a pretty well matured market. So I think our banking partners have already done a pretty good job, and regulator has been constantly pushing. That's why you hear much more things about innovation. Yeah. But with the fundamental being that stability is very, very important. So on the Singapore side, we've been very fortunate that we have established strong banking relationships with a wide range of different banking partners. And that requires you to basically help them see how can you bring value to their whole system, right? It's about figuring out that where are the areas that we do better as a small startup, as a fintech, that is able to be more nimble, that brings about cost cutting or cost saving for them, right? So that will be one of the major considering factor for our partners in Singapore itself. So we have different level of success when we bring that approach to our banking partners in Singapore. But in Indonesia, we are talking about a different landscape over there, right? I think the market, it's you'll be surprised, it's more mature in certain areas than Singapore, but a lot behind in other areas. Like when I say that specifically, I think some of the transaction related stuff, I think the Indonesia banking ecosystems do it a lot better. Like things like virtual account numbers that for fund transfer. I think the tech, if you look at the tech stacks of the offering, Indonesia have it in a much higher level and a much more sophisticated level. You can do a lot more things with virtual accounts versus what the Singapore side have been done. And the reason being is that the ecosystem is a bit different, right? Singapore is more of a credit card world. People go credit and then they use a card for payments, while card acceptance is very, very low over there. So depending on the situation, then I think it's about you showing that what are the strategy you can bring about value to your banking partner. So we also work with a wide range of different banking partners in Indonesia. Like they're always like a play between the bigger banks and the smaller banks. Some of the bigger guys that have bigger market coverage will be thinking about how to protect their business. So you have to think about like cost saving measure, technology that will bring about better value to their customers. On the other end, the smaller players will be thinking about how can I have a bigger slice of the market, right? How can I use your whatever offering that you can provide them to do more? And that's some of the strategy that we did in Indonesia, for example. We work with a smaller banking partner and bring about more exposure for clients, for them. Clients that they traditionally could not have gotten, because like when FinTech or any kind of company want to provide a financial like fund transfer, they will think of the big players first, right? So then the smaller players will have to work with smaller banks, that work with us to figure out how can we provide a tech offering that's much more friendlier or much more efficient compared to the bigger players, so that they can actually, stand out in that market. And that has been the strategy that works well for us in Indonesia.
Right. So I think this has been the rosier side of the story, and obviously you guys got there not without resistance, right? So I think we want to segue into a bit of the reality of the journey, right? So for Jay, for Mriganka, I'm sure you all both had faced hurdles, certain resistance along the way. Would love for you to share this, and because some of the earlier startups might be looking to go down this route as well, to partner with FIs. Maybe you can share the kind of how your journey was been, and perhaps even strategies that you've pivoted along the way which has seen more success.
Maybe I'll go first. I think the main challenge for us has always been education, and education at different level. So, imagine you have the working level, and then you perhaps have a mid manager, and then perhaps a C-suite, or maybe sometimes even the board of directors level. So depending on what kind of project and what kind of requirement that's required for approval, I think education is one of the greatest, I think it's very common, one of the common challenge, but also something that's very, very real. And education about various things, about the technology, about the value add of the technology to the business. But I think a related challenge is also career risk, that sometimes perhaps a solution may be good, and perhaps in the longer run, okay, let's say 3 to 5 years down the road, we can see some benefits. But for various reasons, perhaps leadership is not really thinking that far out, and then career risk may come to the forefront, whereby I do not want to change anything. Yeah, I may not want to innovate. So I think that has been the major challenge. However, we were quite fortunate in the sense that you talk about what are some strategy. I would say sometimes as we talk to, firstly, I think it's important to talk to more people, more institutions, and from there you can get a sense of which would give you better traction. I think quite interestingly for us, when we started, we sort of know that the sales cycle is going to be long. So it could be like 1.5 years to 2 years because it's B2B. And most of the time we're talking about bigger projects anyway. So I think two things happened here. One, we were quite surprised. There were some institutions that moved really fast. One example was a project that we are doing for as a 3-party consortium. So ourselves, STACS, an asset manager and a bank. So this is a 3-year long project that is over 3 phases. And the first time we met them was, I think, last year, December, after Singapore FinTech Festival. And after Christmas, I remember very clearly because over Christmas, I was still messaging them, emailing them. And within 2-3 weeks, we started working with them. And I think the entire sales cycle was like 1 or 2 months. So there are also opportunities like that out there, whereby it can be very, very fast. And this project is one example. And of course, once we get started, then it becomes critical that we deliver a good job, which fortunately we did. So then we moved on to that 3-year project that I talked about, and then hopefully we can come out in the public about it soon. So that's one. And I think the other one is about phasing. So I shared about, some of these projects can be bigger projects, can be an ecosystem project that involves many different institutions. I think one important strategy is always to approach it on a smaller modular phase approach. I think that's just a lot easier for people to be able to take some smaller steps, keeping the bigger goal, the bigger end goal in mind. Yeah, but I think that's some of the challenges and some of the strategy and a few good outcomes that we have seen so far.
Most of the issues I face or we face as a company is very similar to what Jay mentioned. So like sales cycles, at least with banks and regulators as well as law enforcement, are much longer. But like at least from a career risk perspective, we haven't faced that sort of like problem. Like it's not, I think most of these entities realize that they need to understand more about our space, that is cryptocurrency, AML, in order to stay relevant. So they've always had like a bias to action there. But a constant problem in bigger companies also becomes like finding the right decision maker, right? So like often you are stuck somewhere in the middle. So one of like the solutions we found that like worked very well for us is just like at least account for just like a longer term relationship. And as soon as possible, just try and conduct a training for that organization where all you do is impart knowledge about like the space. So what we do is just like try and request for a 2-hour training session, which is conducted for free for the bank. And they can invite as many of their members as possible. And we would deal with like what are cryptocurrency exchanges, what are different types of crypto asset businesses, what is like the public blockchain, what are the different types of AML risks that you see on the public blockchain. Now, and then like finally, we also obviously talk about how we go about solving this or how we go about detecting crime on the blockchain. So this training helps in a lot of ways. Like it gets everybody in a room together. So it helps you interact with everybody at the same time. So from there, whoever is the innovator among that group or the person who's the decision maker, they're quickly made aware of your like solution. So then they know what the next steps are, or they get like a direct line with you. And secondly, I think all across, like for all 3 companies here, there is an education aspect, right? So the more education you impart, the closer these companies come to adoption. So that this way, this provides a very good conduit for them to like consume some amount of information about your industry, but also gives them a platform to ask all the questions that they may have. So helping your client without like a business contract is the first way to get in with them. And then later, of course, you do like they also understand that since you're a business, a commercial agreement is something that you will deal with them at a later stage. So that like the education or the training seminars work really well for us. And I think now we're like even scaling this like all across like Europe, where we feel that like while a bank might be skeptical of a seller, they're very open to someone who's setting up a training session for them to just educate them on a particular topic.
Right. So I think riding on what both Jay and Mriganka mentioned, right? Big part of it is the education piece, right? So you take it to the next level from education. Let's say everyone magically, right, in half a year's time, all our bankers now know about blockchain. They know about the digital assets market. What's really going to be a tangible driver, you think, that's required to push them to the next level of adoption, right? So let's say they find out about it, maybe on a personal capacity. What does it take, do you think, for them to push it on the organizational level? Opening this up to anyone to give your opinion.
I'd say there are two things. Like one is just regulation. So like, and I'll elaborate on that more. Regulations would make banks more open to industries such as cryptocurrency and blockchain. And the second one is the business need or the business value proposition. So what this means is like blockchain companies are becoming a larger and larger segment of financial services companies. So they need to at least start exploring a strategy to like get into like an arrangement where they can bank these companies in the future. So, or like get into business lines in the blockchain space in the future. So with regulations, it's very clear. I think banks would obviously be more comfortable dealing with licensed entities rather than unlicensed entities. So the more regulations there are, the more regulatory clarity there is. If there is a clear-cut license, then it definitely like helps banks deal with blockchain companies, etc. And I'm sure like Tianwei from Xfers could elaborate a lot more on this because he must have seen this firsthand as well. And yeah. The second aspect is more a business aspect. So now like banks realize that there is a branding value proposition here as well, that like no longer are only traditional financial services companies dominating the space. Like there are companies like say Coinbase, which form a significant or like which are significant in terms of the US financial services ecosystem now. Even within like regulators, they have specific arms devoted to blockchain. So banks, like with banks as well, they compete with each other. They want to be seen as the tech forward bank, right? They don't want to be seen as the bank that is for like the older companies only, or they want to know like inform the world that they're ready for this new wave and they're catering to it. And second, just like the business impact. So there are like I read recently that JP Morgan has opened bank accounts for Coinbase and Gemini. So like obviously there is that's a business decision. They see big business coming from these companies, and that exceeds the regulatory risk that they deal with when interacting with these companies. So over time, there would be smaller companies which also become big. So there would be more and more companies within that category of Coinbase and Gemini, and more countries and banks in different countries which also start banking like bigger blockchain companies as such.
Maybe I would just add on to that, yeah. So like I mentioned, we are not really a blockchain company, but if you bring back to the core of what I was talking about earlier on, right? I feel that maybe we have to change our mindset a bit, right? And with the COVID situation becoming the new normal, I think there are a lot of opportunities that's coming out. Ultimately here, I think it's about not really about the technology, but more towards what kind of value can we help bring to the banking ecosystem. And if the emphasis is about that, then the angle that we can probably tackle is more towards like with the COVID right now affecting a lot of them in different wide range of different ways. Like some of the experience that we have seen right now in Indonesia is that our banking partners are really calling us up to think about a lot of more longer term initiative they can kick off, right? Actually, in some sense, I found them more receptive right now to working with partners that they already have an existing relationship with, because it is more difficult for them right now to find new partners given the context they can't have meetings and stuff, yeah? So they are also having an impact on their current business because a lot of their more traditional ways of giving out line of credit and loans, which is a big part of their business, is also heavily impacted with the COVID. So they are already looking out for partners that can help them with their existing business to help buff up the things while they are unable to operate. And that's where I feel that the opportunity is at, right? And the leadership can be done from this side of the way. If you want them to open up to have more adoption, is you show them a way from whatever offering that you're doing that can enable them to basically thrive in this environment they're in right now, where in the COVID situation, which is going to be a long-term impact for the next 1 or 2 years, interaction is going to be at a minimum. They can't do meetings. I think there's a lot of opportunity where whatever technology, and especially in the blockchain space, can bring in that can help to solve this. And that's the key part of what I think we as players in this space should be doing.
Maybe I'll go next. Firstly, I think, Joseph, that's really a wonderful question, because it's a question that we think about every morning and maybe every night before we sleep. And and our conclusion basically in our space, in terms of increasing the adoption of perhaps enterprise blockchain for finance and financial institutions, is basically two things. Number one, the ability for financial institutions to get started simply. By simply, we mean at a much, much lower cost and very fast. So I think over the last 3 years, if they want to come up with any proof of concept, I think you need to first of all select a ledger. You need to get system integrators to start building applications. And I think in the public, we have seen that a lot of these projects take sometimes years and definitely a lot of money. So we do think that that is a hindrance to adoption. Adoption will be enabling them to do it the other way around, cheaply and perhaps very fast in days, hopefully. And the second conclusion that we have as I think about this on the daily basis is about integration. So I think today, at the very beginning, we were talking about not disrupting, we're talking about empowering. So what does it really mean in practice? I think it's about integration of whatever systems or solutions we are building to existing legacy systems. So if you know anything about finance, you know that there's tons of legacy systems that are very difficult to replace. So it is not about replacing, it is about integrating, be it through API, SDKs. And I think that is one of the two ways that I talk about that can encourage adoption. And in fact, actually, this is what we have put into practice. So at the very beginning, I shared about satellite infrastructure. That's exactly to solve the problem of adoption, being focused on these two things, whereby institutions using satellite infrastructure today, they can get started easily, simply, so meaning again, fast and cheaply. Yeah. And then of course, with that, the entire infrastructure need to support integration. So one quick example, today, if there's a particular front end that a bank is already using or broker, and that's very good, you can continue to use that, just port that, connect that through API onto our solution, onto our platform. I think that's one of the very critical point over the last year. As we talk to banks, we realize that when people talk about production ready, that is really important. So, just taking a lot of this feedback from the industry, that's what we are building and that's what we are launching for Satellite.
All right, thanks so much for your opinions. I think to wrap up that piece, our panelists mentioned really evaluating the value add to these traditional institutions. I think Mriganka shared about the regulatory piece. The more regulations there are, the easier is it to transit to more adoption. And I think Jay wrapped up very importantly with the crucial integration with existing systems, so that you don't have to sell them something completely new where they have to go through a whole new learning curve. So that's about the time we have today. And once again, I'd like to thank all our guests. So we had Jay from STACS, Mriganka from Merkle Science, and Tianwei from Xfers. So thanks once again for joining us. If you're interested to connect with any of them, we'll be putting some contact information in the description, and we look forward to bringing you more content from the key players all the way down to the grassroots level within the blockchain ecosystem. So thanks so much again, guys. Take care. Bye-bye.
Thank you.
Thank you.
Thank you.
Bye.